Now, we set this up as a 3-month rolling average, uh, just to get a little bit more jagged view, as you can see, of where the trends might be. The monthly is a lot more subtle. But right now we are on sale prices, and this would be median sale prices over 4 zip codes of Northeast LA that we thought were indicative of the total market. 90026, that's Echo Park and some Silver Lake. 90027, Los Feliz. 90039, Silver Lake and Atwater Village. And then 90065, which is Mount Washington and Glassell Park. So a good amount, a good majority, and Cypress, right. Good majority of the market for us to get a sense of it. So, Darren, I know you looked at this. What are some of the things you saw from this? We're going back to January 2021. So, yeah, what are you seeing?
Right. Well, I think that's, the first thing important to understand is this chart starting in 2021. It's really spanning almost 3 years, close to it. And I think collectively there was a sense, certainly later in last year, that we may have kind of hit a peak in the market mid-year, a little earlier than mid-year. And this chart is showing that, pretty much all of those zip codes peaked out in about the April, May time of 2022. That was definitely when they started really pushing interest rates upward, and the market responded. I'll start by saying certainly the line on top is the 9027 zip code, and the reason that's has much more radical moves is because it's got properties that range from $1 million to 10 million, and so that's going to have bigger moves because of that huge range. So that's less representative than are the lower three, but it's still good to look at all of them. So if we look at the lower three, we're seeing similar patterns in all three of them, and they'll each make some moves based on inventory that's out there, but I think they're all pretty consistent, all peaking around that time, let's see, mid-year last year, and have slowly moved down.
June.
Certainly not aggressive moves down, but may have hit a bottom early this year. And they vary slightly, maybe the 6.5 zip code hit a little more of a bottom, I don't know, let's say March or May, but then all three have picked up, at least from the time of April or June of this year, and have been on the uptrend. Now 6.5 is flattening out.
I wanted to say something about 6.5, just as you pointed out with 90027. I think 6.5 has a big diversity there in terms of market prices, right? Whether, like you said, you're in Cypress Park, the lower end of 6.5, Glassell Park, very hard charging middle, and then you've got Mount Washington, which really still commands, I think, the 6.5 higher prices.
On the higher end.
That's why,
yeah. And I think all these zip codes have those, some more than others. Certainly 2.7's the most radical. I would say 6.5 has some of the lowest priced properties in the Cypress Park area, which is changing rapidly because of that, and because of all the geography around them with higher price points. But even 2.6, you go south of the freeway, it's a different neighborhood, man.
Totally.
And 3.9 can go from, Elysian Valley to right around Silver Lake, the lake itself, with lake views and, 3,000 plus square foot houses, that architectural gems. So,
like you said, big differences other than 90027. Yeah.
So, I mean, all of these communities are diverse in so many ways. And the price ranges amongst them is just one more element where that applies. But the broader picture, we did peak middle of last year. We've had a slow move down, and that's not every property. We've continually said throughout the last year that high quality properties presented well are still selling fast, and those are definitely a segment that's keeping the market up in these zip codes, whereas maybe the lesser quality, lesser present are the ones that are putting downward pressure. But with that said, we've surpassed that peak in all but the 27 zip code, and that was just one big spike there where it peaked out. But, you know, we are above the numbers of the peak last year, mid-year. So even though we've been floating down, we have come back in the past 4 months, let's say. And now we're above the numbers from mid last year. And that's, boy, if you're on the fence, on the sideline, just understanding that might change your perspective, might not. With that considered, we might be possibly moving into a slight decline in interest rates, maybe, which would put more upward pressure if that happens. So be aware of that if you're a buyer on the fence. I know we've had some good activity on our recent listings. You know, we had some earlier this year, and they were a little harder. It was harder to move them a little earlier in the year, but recently they've been selling fast, a little faster with multiple offers. So
well, you know, definitely during the sales meeting that we had at our brokerage, there was certainly the contrarian idea of, you know, if you're a buyer now and you have the fortitude, this is really the moment to try to get your place. You know, whereas, you know, once the interest rates move down, you're going to be in a sea of buyers, and it's going to be even more competitive, and it's going to be even possibly higher prices, right, with all this happening. So there's that. And then they were also talking about on the seller side to be realistic about your pricing now, because you've got to keep in mind that these interest rates have doubled people's, you know, affordability, and you've got to stay in check. So yeah, it goes on both sides to look at what's going on here. Is there anything else on the left-hand side that you'd like to look at? There's homes for sale, closed sales, pending sales, new listings. Anything else you'd like to explore? Months supply, days on market.
Yeah, let's look at supply. Definitely.
Okay. Let's go look at months supply. Oh, wow. Look at that.
Yeah, which is the trend we've been seeing. You continuously, every week you send off, you know, and we announce when we start reviewing inventory and actives and solds, and we touch on pending. But every week we've been seeing an increase. We're seeing 15 to 20 sold, and we're seeing 30 to 40 new listings. And you send a whole history there. When you pull it up on the screen, I'm just like, oh, consistently, there's an increase in supply. Yeah, absolutely. And now's the time where, if you continue to follow that chart, there is a tipping point there. We certainly have not reached it. But on this chart that you're showing, we're also going back to 2021. And you can see our inventory is higher than it was back then. So we were in we flatlined there for quite some time. And then when the market slowed, which is the normal trend, right? When prices start declining a little bit, inventory rises a little bit. That happened. Right in that pocket happened. But now we're increasing a bit, and inventory is increasing a bit. So if inventory continues to increase, it would have the reverse effect on pricing. So we will see if this inventory gets absorbed as we continue to watch this chart.
But, you know, as you can see here, and we're happy to send this to you guys if you'd like. This is a live chart that we have, so it is updating as we go, day by day. But, you know, as you're saying, Darren, one of the things here, it's all remained fairly consistent. But if you look on the left, this is, again, month supply, right? So we've stayed in this pretty tight 2 to 4 month supply. You know, according to the definition of what's a balanced market, 6 months supply is really what you need. We're still in a seller's market, wouldn't you say? And that's the way it's been over the last couple of years.
We are in a seller's market, but yeah, you're right. Look at where we're at. Look where 2.7's at. Look where the zip
Yep.
code of 2.6 is at. We're at 5
Yep. Yep.
months. We're
Yep.
getting
Yep.
very close.
It's starting to move up. Yep.
Yeah, and we've always said that it's not the we're not in that 2 month supply range. We've been saying for probably 6 months plus that it's still a seller's market, but not on every property, and not as much. It's not a one-way street. There's a little more of a two-way dialogue going on. What's interesting for sure is and we feel this, the 3.9 zip code still at 2 months. It's huge. There are not a lot of new listings in those neighborhoods coming up. Atwater, Prime Los Feliz, or Prime Silver Lake. They're not coming up, and we can feel that in the market. And it's been the same. It has been the same in the 6.5, but that's moving up a little bit. So we've actually been feeling a little more options coming to market for that zip code.
Got it. Okay. Well, great, man. This is good stuff. I love looking at this. What else? Anything else there? Total sold volume? Anything?
No, I think that's good. Those are the main the main drivers of the market, direction it's moving in, and the direction it could move in, with this being the inventory, the most key factor related to that.